Hello everybody, welcome back to Case Studies with the Biz Doc. This week, by popular demand, it's Coinbase. Many people ask, where did they come from? How did they get funded? And how did they just create this exchange? And are they an exchange or are they a currency? What are they? And they're an app on my phone and my friends are talking about it. So today, I'm going to break down Coinbase into two things. What are they and what do they do? And if you're a professional trader, this may seem very basic to you, but I hope there's a couple nuggets in here that'll help you as well. So let's start. Where did they come from? Well, back in 2011, there was a guy named Brian Armstrong who was an engineer over at Airbnb. And he had a friend that he knew, some sort of an acquaintance that they got connected, named Fred Ersham, if I'm pronouncing that right. I've seen a few things on it, and I believe that's the right pronunciation. And they go to Y Combinator. There they go again, that incredible incubator that's cranked out some amazing companies that have great products and services that we're using today that are anchor companies out there in the marketplace, including Uber, who's had its issues, but it came out of Y Combinator. So here they go. They come out of Y Combinator with the idea to have the future of money. Now, Bitcoin was the early cryptocurrency. And at that time, you had a variety of questions around how are we going to trade these? What are we doing? So you had a nascent ecosystem forming, which left kind of an open zone where they walked in and said, we're going to do it. And this is going to be the future of money. Now, if it's really the future of money, you've probably got some sovereign wealth, like the dollar is a sovereign currency, that is probably going to get messed up, which makes sense because Airbnb made a habit of messing up people's homes. So maybe he was the right guy to go disrupt the financial market now that he had disrupted the hospitality industry. And so they come out of Y Combinator and we're going to be the future of money. These guys together get $5 million from Fred Wilson of US Venture Partners, the legendary Fred Wilson. They also had a little over $500,000 in the early funding that had come out of Y Combinator and some other sources. Certainly not bootstrapping, that's meaningful seed money, but they were off and running with $5 million from US Venture Partners. Then later that year, about 7 months later, they get $25 million from Andreessen Horowitz. Now this, in roughly 20 to 24 months since Y Combinator is tremendous, they already have $31 million in venture funding. And away they go. So what do? They start making deals and they launch their system and everything. They buy a company called Blocker, which was a blockchain tracking company. So they added that capability to what they're doing. And they cut some deals. On the transaction side, they cut a deal with PayPal and Stripe to take Bitcoin as a valid currency. And then on the commerce side, they added Overstock and the Dish Network, which is a satellite television company. And then we all know what Overstock is. You can buy anything and anything from basically a more mature version of eBay, if you will. And so away they go. They get to 2015 and things are really going well. These are very serious commercial partners to have. And they raised $75 million from DFJ. And once again, Tim Draper strikes again, making a big bet on something on the way up and joining DFJ, the New York Stock Exchange, which was very big because at this point in 2015, according to everything that I've ever read and things I've heard, and I hope this isn't folklore, this was the very first time, and there was a couple banks in here too, that mature financial institutions had crossed the line and invested on the Bitcoin side and the new fiat currency side of the street as all this emergence was coming. And so that was a defining moment. A year later in 16, $10 million from the Bank of Tokyo. And more importantly, they announced in 2015 the Coinbase exchange, where you could actually trade to get Bitcoin. Because there's two ways to get Bitcoin. One is the hard way, is you become a miner. And mining is very complicated. We could do a case study on mining and the amount of energy and equipment that takes to be a participant in the Bitcoin mining ecosystem, so that if you are the clearer of something, that you get that sliver of the Bitcoin. There's a lot that can be talked about the inefficiencies of that and the energy consumption and the effort and utility and equipment that needs to do that. The other way, take dollars and trade them for a Bitcoin at prevailing rates on an exchange. Well, sometime later, they rebranded that the Global Digital Asset Exchange. So Coinbase became this. So let me summarize that a little bit better. What Coinbase is with the GDAX is, one, you've got the GDAX, which is the exchange where they have an order book, the buy orders, the sell orders, and those get reconciled to complete a trade. Then they also have the brokerage where they work with you and me as individual investors, and we have an account, and they are actually the broker for the trade. Having both of those together allows them to go end to end. Now they make fees on this, and they also make fees operating the exchange, and then they're also something of the kingmaker, if you want to use that phrase, because anything they're putting on the exchange is given credibility because now it's being traded on Coinbase, which is seen as a very credible exchange thanks to what they've done with the GDAX. In 17, it got really big. $108 million in venture from IVP, and at the end of the year, this is pretty significant. Take a look at this. At the end of the year, it was asserted that they were actually, in December, I believe it was, the most downloaded app on the Apple iTunes App Store. Now that's saying something because usually the social media apps or the social texting apps and games are usually up there, not business apps, not financial apps. It's usually one of those three. Social media, texting apps like WhatsApp, or what we all know is games. But to have one of these here, this shows you how much heat there was getting into the market, into trading Bitcoin, which was commensurate with all of the great price inflation that we saw in the amazing numbers that were up there. They also, in 17, very importantly, received the BIT license in New York, which was a license to buy and sell. So now that they could have a license to be an exchange to trade for Bitcoin, Bitcoin Cash, Litecoin, and Ethereum or Ether. And that was what they were permitted to trade. But that's the lion's share of the market there, leaving out Ripple and a lot of the small ones. So now they're licensed to do that. And then in 2018, as I like to say, the cops showed up. The IRS comes out and says, hey, we want to know, every person that made a trade or a transaction that was greater than $20,000 on the GDAX where they were buying and selling this digital currency, because we want to tax it just like regular stocks. Hold it a year or more, capital gains tax is collected. Hold it less than a year, ordinary income is collected. Nonetheless, the cops show up and the IRS says, you now have to start reporting and we want information so that we can properly assess taxes. So, which brings us to, okay, where are they? Today they have a vision to be an open financial system, meaning to be the future of an actual currency ecosystem. And right now, today, they are really two companies. The first company is they are the single most well-funded, and you can see over $200 million in venture funding here, and funding coming from traditional Bank of Tokyo, New York Stock Exchange, and some others. So they got this funding, so making them the most well-funded digital asset exchange, digital currency exchange. And on the other side, they are nothing more than a retail, I guess you could just say like a retail broker, where they have a wallet and they have the trading capabilities from the exchange you can do from your wallet. And then they've also announced just recently custody, where they could actually hold custody of assets, which means that even larger banks and other traders are going to be able, like investment banks, being able to have Coinbase actually hold custody of Bitcoin. So Coinbase Brokerage is where you and I can go to buy and sell these cryptocurrency assets. Similar to the way we would go to Charles Schwab or Ameritrade or something like that to go to buy and sell stocks. It's open to retail, and then we'll pay a fee anywhere from 1% to 4% depending on what it is. Now, if we were directly trading on GDAX without brokerage, there's lower fees involved, but that kind of fogs the issue. The fact is they've got a brokerage, you and I can open an account and then put cash in the account and trade these on the exchange just like we would do going to Schwab, put some money into account and buy some shares of Apple or Facebook. And so it's all coming together where now you've got the exchange and you get the broker. Now, the nice thing about both of those is when you put them together, there's certain benefits that Coinbase has, because sources of liquidity and other things are very important if you're going to be clearing trades. Because this person clears the trade, they need to get their money, you need to collect the money from here, and sometimes there's a float in the middle, so you need appropriate liquidity and other things in place so that you can successfully be that and be in compliance with securities laws that govern what you have to have in terms of assets and other backup before you can actually be the man in the middle operating the exchange. So that's what they are: the most well-funded blockchain company in terms of exchange and a retail broker. So let's talk a little bit about the significance of Coinbase as an exchange. There's a couple things here. First, let's talk about security and safety. They've had no hacks. That's very significant because it makes people very confident that this isn't a bunch of engineers in hoodies making kind of a hacked together system. This is a very strong system that hasn't been hacked, which makes people comfortable trading their dollars, their euros, or whatever other currency they're bringing in to be in their account so they can begin trading in the cryptocurrencies. And when you're trading in the cryptocurrencies, also, you want to be confident that they can clear it. There's something else that's interesting. When you think of the New York Stock Exchange and you think of NASDAQ, that's where places where stocks that are traded on those, there's high confidence in those. People say, oh, it's traded on the New York Stock Exchange? I have faith in that. There's also in the United States penny stocks that are traded on what's called the OTC or over the counter. There's less confidence in those companies. What has happened with Coinbase is they are now thought of as a very strong exchange, similar to the New York Stock Exchange or NASDAQ, which means that when they put a green light on trading a currency, and as I indicated, they trade Bitcoin, Bitcoin Cash, Litecoin, and Ethereum. If they were to add another cryptocurrency, like perhaps they bring in Ripple and they trade that, that is sort of a stamp of approval that they're putting on that cryptocurrency, and it's going to experience appreciation because they're seen as being a quality market or a confidence building market. You follow that? And so they can really be a creator of value by greenlighting a currency to be traded on their exchange. People are going to say, there must be some confidence and stability in that, and you're going to see speculation, purchase, which is going to cause the price to go up. So it's very significant that they are seen as this, because they're going to be something of they'll be determining winners just by greenlighting something to come on their exchange. Just like today, there are some companies that are able to jump off the over-the-counter, the OTC, onto the NASDAQ or even the New York Stock Exchange and then get back on their feet, because you have to meet certain requirements and certain size and profits and things like that. There has to be certain things. You don't just write a letter and say, I want to be on the New York Stock Exchange. There are securities regulations. But once you cross those, you're seen as a more credible stock. Same thing with these cryptocurrencies. And that's why being an exchange that the retail investor, maybe you and me, maybe a big investment fund, trusts is so important. And it's also why you start to see price speculation going up and down, such as what's going on with Bitcoin. Bitcoin is going up and down like the Russian space program, up, down, and when it comes down, somebody dies. You take a look at those people that said they were taking money out of their 401ks around Christmas time and they were putting it all into Bitcoin. Well, Bitcoin was like 17 to 20,000 there. You know where they are today, beginning of February 2018, just a little while later? It's like at 8,000. There's only one word for that kind of a fall, and that is damn. That is a long way to fall, especially if it's somebody who's an unsophisticated investor who's jumping in on these cryptocurrencies and doesn't understand the risk and the volatility, regardless of how confident they feel, because, oh, Coinbase is there. This seems like a brokerage thing. I have an app here. It seems like I can trust them. All of that may be true, but the risk in the market is still present. So you got to protect yourself and be careful with it. And so that is the overview of Coinbase. I hope you found that helpful. Wow, no sooner did we finish filming Coinbase and the case study and all that it's about, then look at what happened to the market. And there's only one word for what's going on right now, and that is damn. One of the things that was very interesting in this is what was happening with Coinbase. Remember, Coinbase operates a brokerage where they broker the trades for you, and then they also operate GDAX, which actually the market where those buy and sell orders or the order books get settled. So they're making money either way. Coinbase makes money, but we can't go further and publish this without adding this little segment to it. Look at what happened to the valuations of cryptocurrencies when this market was going down. Suddenly, Coinbase was down at just a little over $6,000. I think it bumped a little bit back up, 6,500, 7,000, but it is way down. And when we were filming this, we were at 8,000, down from almost 20,000 around Christmas. So the volatility that's in the market is clear. But now Coinbase, which is what the case study is about, remember, they make money either way, operating a market, the GDAX, and being a brokerage, taking fees on the individual trades. So either way, Coinbase makes money. Now, are cryptocurrencies here to stay? Well, that all depends. Goldman Sachs seems to think that all cryptocurrencies are going to zero. It's going to be an important lesson for America and the world, and then they'll be replaced by other digital currencies that, quote, do things right. Now, I don't know. Is this Goldman Sachs saying this because they are a naysayer and didn't have a big play in cryptocurrencies? Who knows? But it's very interesting that a very powerful player like that is up there talking about it. What doesn't change is the vision and brilliance of the founders of Coinbase and what they have done in a very, very real new segment, cryptocurrencies, and how they have built Coinbase to what it is today. We had to add this because of what happened. Please subscribe to Valuetainment, because when we reach 1 million subs, it will be the first annual Valuetainment Entrepreneurship Conference led by Patrick Bet-David. And we will be jacking it up to bring you high quality content in a couple highly concentrated days to make you and your business better. So let's get to 1 million subs. And until next time with another case study, I am Tom Ellsworth, the Biz Doc, and I hope I left you better than I found you.